back. Mike Austin joins us now with more on the bumpy road for soybean producers.
It has been ever since we started this trade war, or at least tariff war with China. Matter of fact, among the big topics of conversation at this year's trade talk was our current trade policies. And despite our tariff war with China, members of the American Soybean Association say they still support the administration's policies, although they admit the tariffs have left a big void.
It's been a very big concern on farmers' minds with the amount of soybeans we ship to China. Around 1997, we sent 400 million to China. Fast forward to 2017, that was 14 billion.
And that figure could be reduced by as much as 90% if the trade war expands in the next year. As for this year, it's already impacting price.
This time of the year when normally we would have a huge exports to China, the exports are slow, and that's backing soybeans up into the system. So if you go out to the upper Midwest, you see soybeans, elevators that won't take delivery of soybeans, very, very poor basis.
And as far as the duration of the tariff war?
I was cautiously optimistic when the tariffs first went into place, or we were first talking about tariffs and there was negotiations, that it would get resolved very quickly. However, I think that the Chinese have shown that they are very resolved in not lowering the tariffs until they know clearly from the Trump administration what's on the table and what they have to negotiate.
So in response, the Soybean Export Council is now focusing in on trying to expand existing markets as well as finding long-term new markets.
Where the population is very high, the soy consumption is very low. So think of India, Pakistan, Bangladesh, Nigeria. That's where we're going to be spending a lot more of our time and investing a lot more of our dollars in the near future.
But for the immediate future, soybean prices continue to be very soft. And speaking of those prices, according to those at the American Ag Bankers Conference, well, they say next year's soybean prices will be determined in part on whether or not our trade situation with China is resolved. Now, if things stay status quo, they're calling for prices to range from only $7.50 to $8.25. But if things do get resolved, the average price could be about $1 higher a bushel for beans. And I guess, Brittany, the real ray of sunshine might be the fact that the USDA is not going to have a trade mitigation payment for next year, which kind of gives them maybe a hint they think the situation can be resolved. But it's just like our yesterday's story. We got to wait and see.
All right, a little bit more of that waiting game.
It really is, yeah.
All right, thanks so much, Mike. Well, let's take